Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the euro against the Canadian dollar. The euro against the Canadian dollar currency pair is gaining ground as the Canadian dollar, which is closely linked to commodities, comes under downward pressure due to falling crude oil prices. West Texas Intermediate crude oil has ended its 4-day winning streak, trading around 60.5 United States dollars per barrel. Oil prices weakened following a third consecutive weekly increase in United States crude inventories, with the American Petroleum Institute reporting a rise of 4.4 million barrels last week, the largest increase in over 5 months. Additionally, the International Energy Agency projects a record surplus next year, raising concerns that global supply may exceed demand. However, the upward potential of the euro against the Canadian dollar may be moderated by the Canadian dollar receiving support from expectations that the Bank of Canada will maintain a cautious stance in upcoming monetary policy decisions. Core interest rates of the Bank of Canada remained near 3% in October. The unemployment rate stood at 6.9%, and wage growth was around 4%, confirming the central bank's careful approach. Markets widely expect the Bank of Canada to keep interest rates unchanged through the end of 2026. The euro is also supported as the European Central Bank maintains a cautious but stable approach, leaving key interest rates unchanged amid steady economic activity and inflation near the target level. This combination of factors, a weakening Canadian dollar and a stable euro, suggests a bullish outlook for the euro against the Canadian dollar currency pair in the short term. Next, let's move on to the euro against the Japanese yen. The Japanese yen is strengthening against the euro amid growing speculation that the government of Japan may intervene in the foreign exchange market to prevent further depreciation of the national currency. Japan's Minister of Finance, Shunichi Katayama, expressed concern about recent market movements, stressing that exchange rates should move in a stable manner, consistent with fundamental indicators. His comments suggest that authorities are closely monitoring market conditions and are prepared to act if necessary, which supports the yen in the near term. Kazuo Ueda, governor of the Bank of Japan, stated that the central bank is gradually reducing its economic support, signaling its intention to cautiously raise interest rates based on incoming data. However, Prime Minister Sanae Takaichi expressed dissatisfaction with the prospect of higher rates, urging the Bank of Japan to maintain low interest rates to support economic growth and price stability. This policy divergence between the government and the central bank creates uncertainty, which can weigh on the yen. Yet the risk of currency intervention still provides a bullish factor for Japanese yen. On the euro side, the European Central Bank has kept its key interest rates unchanged since June 2025, and markets expect this pause to continue into next year. According to analysts, the rate-cutting cycle has likely ended amid a stable economic outlook, offering some support for the euro. Overall, while the euro has some fundamental backing, the balance of risks leans toward yen strength due to rising intervention fears and the Bank of Japan's gradual policy normalization. This environment creates a downside bias for the euro against the Japanese yen pair, indicating a bearish outlook in the short term. So these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.